Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja.
Hello, Cashflow Ninjas. MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today. In today's show, we're going to look at how to replace a high six-figure income with real estate cash flow. This episode is recorded as part of the Podmax Event hosted by Erik Cabral and his team at Onairbrands live at the Hive in Trenton, New Jersey. My guest in this episode is Anna Kelley. Anna is a founding partner of Zenith Capital Group, Apex Multifamily, and REIMom.com. Anna began investing in real estate 20 years ago and has purchased, renovated, and rented millions of dollars in real estate across numerous asset classes while working full-time and raising 4 active children. She has recently retired from her corporate career after creating financial freedom through rental property investing. She currently owns and manages a rental portfolio valued over $16 million and is invested in over 1,000 doors as a limited partner. Anna actively seeks out the best multifamily investment opportunities for her partners and investors. She coaches new investors and enjoys helping others to overcome fears, increase knowledge, and minimize risks in real estate. She's also an Amazon #1 best-selling author and runs a meetup group for women in real estate. I've launched another podcast, that's correct, Cashflow Investing Secrets. It's a shorter show, 10 minutes or less, where I share one idea and concept at a time that I've learned from interviewing over 500 Cashflow Ninjas. You could go to your favorite podcast platform and type in Cashflow Investing Secrets, and you'll find the show. The show is also available on all video and live streaming platforms. Savvy investors know that in order for the miracle of compounding interest to work, its magic, you have to be constantly invested in all stages of the economic cycle. So the question then becomes, how do you find solid investments when the stock market is close to all-time highs and everything else just seems so inflated? That's where our friends at Zenith Capital come in. Since 2011, Zenith has helped more than 300 accredited investors allocate more than $25 million to mobile home parks, self-storage, and workforce housing due to their ability to perform well during economic recessions. If you're interested in learning more, head on over to asymcapital.com. That's ASYM capital.com to get instant access to their investment offerings. MC Laubscher here, the creator of the Cashflow Ninja and Cashflow Coach at Producers Wealth, where we help our clients integrate infinite banking with their business and investments. To learn how you can create your own banking system to turbocharge your investments and business in 30 days or less, go to yourownbankingsystem.com. That's yourownbankingsystem.com.
We are live at the Hive, and I'm here with Anna Kelley, and I just met Anna, and we've already had a great conversation, so I'm super excited to jump into today's show. We are, as I mentioned, live at the Hive, part of a fantastic event, Podmax. Definitely check out all social media posts on a hashtag Podmax for this event. It's been a pleasure already meeting you, Anna.
Thank you so much. I'm so happy to be your guest.
Yeah, can you please share a little bit about your background and journey with my listeners?
Sure. So the short and sweet version, which I'll let you ask questions as you would like, is I started out my corporate career as a private banker for Bank of America. And so I started out learning all about different types of investments and what to do with your money once you had money. And then I transitioned to working for AIG Life Insurance Company, where we put together institutional level hedge fund investments for life insurance policies for high net worth individuals. So with that said, I've always had kind of a financial mind, and I've always thought about what's the best way to invest and what's the best way to grow wealth. But I started out with zero. I grew up in Section 8 housing in San Antonio, Texas, had nobody that knew anything about finances in my family, and I was the first one to get a degree in my family. And so I did not have things handed to me, but I just learned, the power of real estate and how that could help change lives and financial lives. So on the side, while working full time, I started investing in real estate. And I started out with just a couple of rentals 12 years ago after having done some flips and speculative property investing. And over the last 5 years, I've gotten really, really serious about investing and went from, basically negative hundreds of thousands of dollars in net worth from starting a business to multimillionaire in 5 years through the power of cash flow and equity appreciation from real estate.
Fantastic. Well, you know that I love the word cash flow, and I know you love it very much as well. From a philosophical standpoint and your approach to wealth creation and building wealth, is there a checklist that you use? Is there a framework that you draw from when you look at deals and just your overall approach to wealth building and creation?
Sure. I think primarily I would say slow and steady wins the race. To only invest in things that you are willing to invest in long term. While there's a place for flipping and wholesaling and things like that, it's very transactional, so you have to always do it. And you're really creating another business rather than investing in long-term capital appreciation and cash flow. And so I'm always looking for investments that I can really hold long-term so that I can live on that cash flow passively eventually. So, cash flow often, if you don't have any money to start out with, is built on the blood, sweat, and tears of active income. Yep. And so I had to really start with all the blood, sweat, and tears, putting in, sweat equity because I had no cash. Right. And then as you go, you start to be able to have more cash than you do have time. And then what you buy is kind of shifts. Right. So I am a firm believer that there's no one size fits all, and that depending on your skill set, your family dynamics, and how much time and cash you have available, there's different niches that work better for you as a person, but that you need to figure out how to utilize your time and your resources as efficiently as possible to buy assets that have both cash flow, appreciation, and asset preservation. And then you just see where the opportunities are where you can get that appreciation, cash flow, and preservation, and then utilize your resources or other people's time and money to build your cash flow and to build your portfolio. Yeah.
A lot of great points there. I want to touch on 3 of them because in today's world, especially, we're so... how can I say? This is part of the financial media is we always just get like a snippet of things, right? We get this person became a millionaire or a billionaire or this person created an app or this person did that. But it's the big picture. It's long term. Sure. It's every single day making deposits. And this is what I've seen with the most successful people, making those deposits daily, understanding that it's a long game. And it's not a Bitcoin that's going to turn you into a millionaire overnight.
Absolutely.
The second point that I want to stress on that's very important is that real estate is a business, and you got to approach it as a business. The weekend warrior stuff, if you're going to be serious about it and you're going to have results and success, you have to approach it with a business mentality because you're starting a business. And then the other thing that I also wanted to touch on, which is such an important point, is there are different sources of capital. Mm-hmm. So you not necessarily had money in the beginning, but you had other things, skill sets, right? And time. And as you mentioned, There was a lot of sweat going into that. Mm-hmm. So if you're starting wherever you are right now, because we've got listeners in many different stages and phases of their lives, if you're listening to this story, that I really want you to understand that you're building a business or starting a business from somewhere to go somewhere. So you have to utilize what you have, whether it's time or the skill sets that you have, right?
Absolutely.
Okay. So a couple of things that comes to mind, and I'm just trying to put my newbie hat back on, right? And a lot of listeners are just starting out on their journey. So they might be thinking, boy, where do I start? What types of real estate? What types of, markets, niches, and so forth? What were some of the things that you did on your journey to determine that, and some of the advice that you can share with our listeners?
Sure. My journey was a little bit unique, and this is where it goes back to really you have to just kind of look at you and look at where you are. And typically when you get started in real estate, the best thing to do is get started where you are, because you are going to want to be able to find properties that you can step foot on, that you can understand what you're buying. You want to become a local market expert and really get to know the market you're investing in, and knowing whether a particular deal is a good deal or a bad deal, because you make money on the buy. And so if you overpay for a property up front, you're not going to do as well 9 times out of 10, over the long run on those properties as buying properties well below what they're worth. And you also create connections and networks of people that will help you when you become a local market expert. So for myself, we moved to a little town right outside of Hershey, Pennsylvania 12 years ago. I moved from Texas and I didn't know anyone other than my husband's family. And so we we house hacked and we business hacked a building. So we bought our first commercial property for my husband to open his chiropractic business in, and we inherited 3 tenants with that property.
Okay.
And we did that instead of leasing space because we knew a lease was expensive, and if we had some tenants helping with that cash flow, it would reduce our outlay for the mortgage and help us to be more successful in a startup business where we were starting with literally hundreds of thousands of dollars in debt. And then because we sold a big house in Texas, we had this vision of starting over from scratch, and we knew that we did not need to live the American dream today. We needed to sacrifice today to build tomorrow.
Yep.
And so we bought a 4-unit apartment building. I had a 3-year-old and a 10-month-old, and we moved into a little tiny 2-bedroom apartment. It was rough, and we fixed it up, and we learned to deal with tenants at our door every single day and asking us to take care of things every day.
Yeah, they knew where you lived.
They knew where I lived. And so we became a landlord kind of as out of necessity, but I had always thought one day I want to own real estate and one day I want to own cash flowing properties. So it was kind of the perfect time and the perfect opportunity to try to start that. Lots of ups and downs in between. But by having those couple of units, those 8 units at that time, learning how to work on them ourselves, because we didn't have any resources. We have negative hundreds of thousands in debt.
Yeah.
Couldn't get, loans beyond those 2 mortgages. So we learned to be a landlord and learn what it takes to fix properties up and to have maintenance contractors that we need throughout town. We developed relationships with attorneys and with the courthouse because we had evictions and, all kinds of things. So just because we started investing locally because we didn't have cash to just deploy elsewhere,
right.
We really made it a point, and I think it's really crucial for your listeners as well. If you don't have a lot of capital, start where you are, really get to know the market and the people in that market that can help you to find the right types of properties and to become a successful real estate investor for the long term.
What were some of the things that you did to scale the real estate business after that? What were some of the strategies that you can share after you got all the black and blues, the bumps, right? and get through the initial phase of actually becoming an expert in that market?
Sure. I think the biggest lesson that I learned is that you have to get creative when there are roadblocks. There are going to be so many ups and downs when you start getting into real estate, especially if you're in residential housing, whether that be commercial size or not. So I had so many ups and downs, MC. We started our business in 2007 and bought these buildings in 2007 and 2008. And then the market crashed. Yep. And I worked for AIG Life Insurance Company, which was one of the biggest companies that had a $2 billion bailout by the federal government to keep the financial system afloat. Yep. So I lost 3/4 of my 401k in a week. I thought I was losing my job, and I was the sole breadwinner because I had a husband that had just started a new business, and things were really bumpy. So while I had these dreams of becoming, this real estate mogul in 2007, by 2009, they were pretty well crushed. I could not get loans from banks. Nobody was going to lend to us when we had hundreds of thousands in debt, and I worked for AIG, which they thought was going under. Yeah. And so it kind of stalled us for a while. And the same time, healthcare changed. And so my husband's business really started to suffer because people had to pay large deductibles instead of, copays. So all those things to say, these were things that were totally unforeseen. We planned for the best. We thought we were making wise financial decisions. And thankfully, the cash flow from those buildings is what kept us afloat. I had borrowed from my 401k. When we talk about creativity, I thought I've lost 3/4 of it. Do I want the rest in the market? What else can I do if I lose my job? How can I replace a 6-figure income when I'm in little bitty rural PA and working for a big corporation in Houston and New York? And so I thought, well, at least if I can figure out a way to find cash flow, I can take a lower paying job. Yeah. So I borrowed from my 401k, which I know financial advisors tell you not to do.
Yeah.
But I knew that if I could buy another 4 unit, I could make another $1,400 to $1,600 a month to cover our food and our groceries. So I got creative and used the only resource available to me. And after I bought that property, which the original lender pulled the loan for me the day of closing, because of their concerns with AIG.
Yeah.
I had to find another lender to do it. Thankfully, I found a local lender that did it. But after that, I was pretty well tapped out. So I didn't know about being creative and resilient at that point. I just thought the sky is falling and we'll just do our best with the 12 units that we now had to fix them up, raise the values. And I knew that one day the banks would lend again, and that I would be okay and I could continue to grow then. So I had several more children and basically didn't do anything else in real estate other than focus on growing what we had for another 4 years because banks kept telling me no. Yeah. And once a bank said yes, and once I decided to look into creative financing options and seller financing options and educate myself on that and actually take action to approach retiring landlords of multifamily buildings to sell to me on seller financing, I started to have some success. And that's what really ramped me up to be able to grow and scale to the point that I am today.
Yeah, your story is just quite incredible because I can just imagine, 2007, 2008, AIG was all over the news at that stage, ensuring all of the bad bets that a lot of the investment banks had made. Markets are cyclical, right?
Yes.
So where we are at right now, a lot of folks are saying, it's a little bit overheated, and markets are also very local, right?
Yes.
Every real estate market is different. What are some of the things that you take from that you would do to position yourself for a potential next recession or a downturn in the market?
Absolutely. I just did a talk on this for my Women's in Real Estate group because I think it's really critical that people not only be short-sighted to what's happening where you are, although it is very local, and so where you are is very important, but you have to understand the economy and how economic changes go in cycles and how they can impact you. We were totally unprepared, even though I had a background with investments and I had done mortgages and I had done subprime lending. Like I understood general personal economics, but I didn't understand global and national economics. And because of that, we started a business at the height of the market. We bought buildings at the height of the market, almost 100% finance buildings at the height of the market. And when things crashed, we were just absolutely had no idea what to do and knew no one that could tell us what to do.
Right.
And so I learned so much from that and being able to weather that storm that now I'm a really cautious, very conservative investor. And so at this time in the marketplace, the things that I think are most important is that you take very little risk today. This time in the market cycle where we know we're in hypersupply coming down toward a recession. There's a lot of different, fundamental indicators that tell us that, but we want to now focus on income and preservation more than we do on that appreciation that has risk involved.
Yep.
So while you can look at all kinds of different properties across multifamily, because that's where I specialize in, or even single family or duplexes, if you invest in a class C minus or D area, you are relying on a business plan that relies on people that already can can barely pay their rent.
Yeah.
And so if the economy turns and they lose their jobs, you're going to have tons of evictions. You're going to have people that can't pay. You're going to have higher economic vacancy, and then you're not going to be able to pay your mortgage if you took too much leverage out or you overpaid for that property. Mm-hmm. So at this point in the market cycle, while there may be a place for that type of investing, or there may be a place when the economy is doing really well to take bridge loans and riskier properties that need a huge value add, at this point in the market cycle, I want stable assets in really strong economic areas where there's a lot of diversity in the employers that are there. And that makes the market itself, that local market, resilient. Yeah. So that if one employer goes under, like AIG almost did, and nobody could have imagined, Bear Stearns, Lehman Brothers, all these big companies, Washington Mutual going under, if they were your primary employer in that area, kind of like GM in Detroit, the whole area could go down. So you have to really invest today in areas where there's a lot of growth, not only in the number of people that are moving there, but growth in the number of employers that are coming there. So like I love Houston and Dallas and Atlanta, not just because everybody wants to buy there because there's growth, but all these companies are coming in there. So it just makes the area resilient to downturns. When you have such a large, diverse employer base. And also within those areas, you want to be in suburbs where there's great school districts. Yeah. Because when people lose a job, they're going to have to downsize in the type of living that they're living in, potentially from a house to a Class A apartment building, or from a Class A apartment down to a Class B apartment building. But they're going to do everything they can, MC, to keep their kids in their good school districts where it's safe. Yeah. And so I want to invest in areas where there's strong schools that I know people want to live. And even if they lose their job, they're going to stay in that area and they're going to try to find another job in that area. And I like Class B properties or Class C older properties that are in Class A and B areas, because the Class A people and the Class C people tend to be hit the hardest. So I want my tenant base to be in those Class B areas, A to B areas, and buy a little bit of an older building that has some upside. Yeah. Just not as much risk in that upside as what I might take on if we were in a growth phase before hypersupply.
You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is the show where cash is not king, but cash flow is king. We will be right back after a word from our sponsors.
Kings, queens, and royal families, along with the nobility and ultra-rich, have warehoused and stored their wealth for centuries in gold and silver, art, land, and real estate. These assets have stood the test of time through centuries and have been a great place to preserve and protect their wealth. Like gold, silver, land, and real estate, art has been around for centuries and will be around for many, many more centuries. That's why the ultra-rich will continue to invest in art and preserve their wealth in art. While the S&P declined 5.1% in 2018, the art market returned 10.6% and was called the best investment of 2018 by the Wall Street Journal. Masterworks is the first company to allow investors to buy shares of great blue chip art masterpieces by artists like Picasso, Monet, and Warhol. You can get set up on their platform at cashflowninja.com/art.
My friend Dave Zook from The Real Asset Investor says you can be conventional or you can be wealthy. Pick one. The Real Asset Investor team creates value for investors looking for higher yield returns from ATM machines and self-storage investments. Their syndications offer attractive investment opportunities that produce strong cash flow, equity growth, huge tax incentives. They are truly passive and managed by a world-class team. To learn more about the exciting investment opportunities the Real Asset Investor offers, such as their ATM and self-storage syndications, please visit cashflowninja.com/real asset investor. You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is the show where cash is not king, but cash flow is king. Now let's return to our interview. It's funny that you mentioned Washington Mutual because I actually had mortgages with Washington Mutual during that time. So it was interesting for sure. It changed hands quite a bit too, right?
Yes.
It's like I didn't know I would get a bill somewhere and I don't even know who this is. This one bought this one or took over this one. Or
right.
It was kind of crazy. Yeah, I just had a flashback. Side note. This time I'm not sweating.
And so the key is we have to learn from that. And even though this recession may not be as bad and it may not be as real estate driven, it will still hurt for some time. And so if you're only playing the short game and you think, I'm going to get in, get out, and make all this money, and the economy turns on you, you better have a backup plan.
Yeah.
You know, the more well-heeled you are and the more cash you have and the more businesses you have, the more risk you can take. But for most people, you know, that aren't ultra mega millionaires, I would say give up the risk right now for the next 18 to 24 months and go for balance your risk and your return and focus on that income and that preservation more than you are that appreciation.
Yeah. Absolutely. One of the other questions I had, and it's great that you touched on the market there and also the type of class buildings that you're looking into, because that was going to be my next question. So those are the markets that you're looking at. What are some of the additional things that you're looking at for underwriting? Is there something that you're adding to it because of the market environment, saying this is what I'll do with my underwriting to be a little bit more conservative, you know, in my pro forma and so forth?
Sure. There's a couple of things. I think one of the things that I do is I make sure that when I'm underwriting a deal, I am going for the lowest rate, longest term mortgage that I possibly can. And I will not do bridge financing. So I want to make sure that I've got a stable return for at least 10 years. So I'm looking for a 10-year fixed. And I like interest only as long as you're going interest only on an asset that doesn't need a significant reposition, but it's more of a light value add. Maybe the market's rents are $200 below market and you can go in and update to vinyl plank flooring, maybe paint the cabinets, put in some new countertops and raise the rents $200.
Gotcha.
So if I can get IO for a few years on that type of very stable asset where I could make my mortgage payment even if it weren't IO, but I'm taking advantage of that IO and having at least 10 years fixed, then I feel like the loan is what's going to help me if there is a cash flow issue down the road because of a downturn. I'm also not necessarily trying to push all rents to where they are today. So, for example, we have a 250 unit in Atlanta that we're looking at, and there are 10 units that have already been updated, and they're getting $200 rent premiums.
Yeah.
Well, in our underwriting and what we're showing to our LPs, our investors, we're only banking on $164 increase on those unit turns, even though we know they're already getting $200.
Yeah.
And part of that is because we know during a recession, we might have a little higher vacancy rates. We might, rents could come down a little bit. So we're just being ultra conservative. We'd rather under promise and over deliver if things go better than really push the underwriting and say, this is what we're going to do. And if there's a downturn, it might not be as good.
Yeah.
So that's important. We're also modeling a higher exit cap than what we are at today, assuming that cap rates are going to increase, which means it's an inverse relationship. The values will come down for that same dollar of cash return. So those are the primary things that we're looking at. And just making sure, too, that once we have rehabbed a property and gotten to our market rents, that we're not at the top of that market for rents. We don't want to be the most expensive complex in that area because we will have higher vacancies. So if we can force the appreciation and force those rents and be, maybe 10% below the most expensive, then when people that are hit in those most expensive have to move, they want to come to our complex because it's the next nicest for their money.
Right. You mentioned Atlanta, and one of the things that's fascinating is this huge migration. I don't even really think I can put it any other way in the country,
Yes.
right? So a lot of folks are leaving California, which everybody kind of knows of, Illinois, New York, New Jersey.
Yes.
So New Jersey's got a huge outflow, as will Connecticut and so forth. And the beneficiaries a lot of people have spoken about Arizona, Texas, and Florida, right?
Right.
But Atlanta and Georgia is also quite an interesting market. Could you share what are some of the things that's attractive to you about that market, and what interests you about that?
Sure. There are more new Fortune 500 companies moving to Atlanta, Georgia than anywhere else right now.
Wow.
So like Delta, Home Depot, I believe Coca-Cola.
Yep.
There's a big list of them that are moving in there. Very similar to what you're seeing in Dallas and parts of Houston.
Yep.
And the growth of population in Atlanta is very similar to what it is in Texas. And so it's one of the top 2 to 3 areas in the country where both businesses and people are continuing to come.
Yeah.
And so not only is that the case, but you've also got, because of the influx, you're not in hyper supply there. And that's the key. So when we talk about those economic cycles, after you have your growth and your recovery from a recession, you tend to get into overbuilding and hypersupply at the height of the market. Mm-hmm. All these new builders come in, they think they're going to fill the properties, and then when it crashes in a recession, they're stuck vacant. Yeah. And so that's a risky place to be. When you have so much inflow and so many businesses coming during hypersupply, because it's so economically diverse, and there isn't enough stock in the apartment buildings already, then being able to go in there, that you're going to have more demand than you already have supply for. And so you're not going to be hit as hard when hypersupply goes into recession as in some areas.
Right. That's very, very interesting, and I appreciate that because, there's a lot of Fortune 500 companies, and 100 think of Coca-Cola, that's right there. Let's talk. I love your brand, by the way, REI Mom. So, what are some of the things that you're sharing and teaching your children as far as money? Because obviously that's where it all starts. And what are some of the things that you're sharing about real estate to them?
Sure. So my children, MC, are 8, 10, 13, and 16. The 8 and 10-year-old, they think money grows on trees. We say we want to move and we see $1 million house. They're like, just buy it, Mom. And I say, You can't just buy it. Well, just pull the money from your bank account or charge it on your credit card. And you say, it doesn't really work that way. Although even as children, they're speaking what most American people think. We'll just go into debt, we'll put it on credit, and we'll just figure it out later. Yeah. And so I'm teaching my kids really to, number one, delay gratification, that it is better to spend on what you need and to delay some of the wants. So even small things like when they're purchasing, a tablet, every year they want the new tablet and they want the new Nintendo, and it's $100 or $200. And I say, listen, if I get you this, it truly is your one and only Christmas present. You will not have a lot of different things. Yeah. And when it breaks or the little controllers break, you're going to be stuck, and you spent all your money on one thing. And then you're going to get tired of it, and you're not even going to want to play with it anymore. And then you're going to wish you had all this other stuff. Right. And so I've taught them things like that where they really only got one Christmas present. 2 of them, because they wanted the Switch and the game. And I said, that's it. Well, within a couple months, the little joystick broke. And I said, now you have to earn your money so that you can replace the joystick. So even though we've done well, I want them to understand that in our society that wants what we want when we want it, that's a really unwise way to live. And it can get us into a lot of trouble and debt and not having what we need because we're too busy focusing on the shiny gold object syndrome that's going to fade in a few months, and we're going to want the next bigger thing. So my little ones, I try to teach them things like that. Back to school shopping. So I said, I went from literally nothing to multimillionaire. I took 3 of my kids shopping at Walmart. And oh my gosh, MC, when I was in high school and my parents took me to Walmart just to pick out a shirt or 2 for school, I would not even get out of the car. I'm like, I'm too good to shop at Walmart. I want to go to Macy's and Dillard's. Yep. And I bought 3 of my kids all of their back to school clothes at Walmart. Yeah. And I felt great about it because I saved a lot of money. And instead we spent, 31 days, I think, on vacation this summer, going cross country, not having to worry what we spent on hotels, what we spent in restaurants. We just enjoyed life because we made sacrifices in areas that really aren't that important so that we could focus on quality time and lifestyle rather than things. Right. So those are the main things I'm trying to teach my kids. My older 2 are starting to get really interested in real estate. So my 16-year-old is a junior in high school, and we're talking about college and future career. And, nobody below probably 22 to 25 years old has any idea what they want to do. And they go into school and now they're paying, 6 figures for a basic education, coming out having to wait tables and not able to get good jobs. And they're strapped with debt. It's one of the reasons that apartments is so attractive, because millennials just can't get loans because of all the debt. So I'm really trying to teach my kids about buying assets to pay your liabilities. We're helping my oldest find his first rental property so that he can use that rental income to pay for his car. So we're not giving him a car. We'll give him one to use, but we want to teach him how to build cash flow, use that to pay for his assets, and how to give himself the freedom to take a few years to figure out what he really is passionate about and really wants to do by being able to have some cash flow built up by the time he would otherwise be in college, and give him the freedom to say, you know what, if I decide I want to do something where maybe I'm going to be a coach and I'm going to make $30,000 or $40,000 a year, I don't care, because I can on the side build up cash flow that allows me to do what I'm passionate about.
Right.
So we're not pressuring him like we used to. You must make all A's. You must do great. You must go to college.
Yeah.
We're saying, let's learn about building your wealth now while you're 16 years old, so that you're in a better position to do what you're really passionate about in life. And if that becomes real estate, we can teach you how to become a real estate millionaire with no money. More than what you would ever learn in college. But if that's not, take a few years to figure it out, and then we'll help you get through college when you know what you want to do.
Absolutely. I love that. It's funny when you were saying sharing the Walmart story. I actually said to my wife the other day, I'm starting to understand my parents more and more every single day now that I have kids of my own, right? You've done fascinating stuff with your community too, and build a community around this brand. What are some of the things that has helped that growth and that community, and what are some of the things that you've done in that community?
To be honest with you, MC, it's really just grown very organically. I really have had very little strategy in trying to grow a brand. It started out, I met a lot of people in real estate. And so I just created a separate Facebook page that was Anna REI Mom. And to be honest with you, the reason I did that at first is because I didn't want people that I didn't know that I was meeting at conferences to know where I lived, where my kids went to school. In today's day and age where there's kidnappings and there's shootings, and I just wanted to protect what was sacred to me and not to have that exposed. And so I created a separate Facebook page just so that I could talk about real estate with people that I knew were in real estate, and to be able to kind of share my growth and challenges. And people just were really attracted to the fact that I was working full time. I was building this full-time business, literally full-time on the side, nights and weekends and lunches. And I had 4 kids. And so I was just really passionate about, since I started out truly with nothing and didn't have anyone to show me a better way with finances, I'm really passionate about helping, especially moms, young girls that are maybe living in poverty, to really learn that they can take control of their finances and they can take control of their future, and they can build real estate wealth that lasts, to empower them to do that. And especially a lot of moms who are so busy juggling so many other things that really are their key priority, and they either feel guilty or that they can't muster up the time to get into real estate. And really you can. And so I've just tried to share my story and to empower women to be able to do what I'm doing, and to show them that as hard as it is, and it's gonna be hard, there is no easy, rich way to wealth unless you already started with money.
Right.
But that it is so worth it, and it took me 16 years, MC, from the day that I tried to flip my first property to be home with my kids. And I thought 1 or 2 flips a year and I'll be home. It took 16 years for me to get home with my children. And at this point, they're in school, but I'm able to, because of my real estate wealth and because of sticking with it, I was able to retire. And now I'm able to focus on, real estate and that next level of multifamily investing during the hours they're in school, so that when they're home from school, I can completely shut it down, barring a few emergencies, and I can just be the best wife and the best mother that I can be. And so for several years, it was really, really hard, but it's just so worth it. I've bought myself 21 years of early retirement by sticking to it and doing the hard stuff with that vision toward the future. And so just sharing that has organically, I just hit 5,000 for like the fifth time, people following me. So I'm like, I better create a group and I better just start sharing in the group because I can't keep friending people. So I've just had to really back out my, friends that I didn't really know or that didn't interact with me and just be prepared for that growth. So I'm just kind of saying, let's see where this goes. And the more ways that I can get out there and get my story told to encourage and empower other women, and especially moms, the better. And so I'm just enjoying, being able to be a blessing to others with learning, from what I've done.
Absolutely. And it's great to just see it or grow organically. And it's the authenticity and your story that's so powerful too, that just connects psychologically with folks. I just think that psychology is so powerful.
Yeah.
I mean, the story just that came to mind too is what was it? The 4-minute mile with Roger Bannister. When he first broke that, it literally wasn't even like another couple of months, and then the next guy was there, and then the next guy, and the next guy. So when you see someone such as yourself accomplish something, and you have a story, and you share and say, "Hey, this is not, it's not easy, but it's doable, and you can do it," people definitely resonate with that. So that's fantastic. Now, one habit I've observed from wealthy and successful people is that they're always studying new things and learning new skill sets. What are you currently studying and learning?
So primarily I am studying about syndication. So while I have, built my own nest egg with small rental properties and really focused on 4-unit apartment building as kind of my sweet spot, I always knew that I wanted to scale up into the larger properties. And so I started really focusing on learning how to target market sellers of bigger apartment buildings. And I am not a marketing person. I hate sales. I hate marketing, but I've just kind of done it, here and there because I'm like, I got to figure out a way to drum up business. So I started learning how to target market sellers. And so my first goal, back last year was start to get in front of sellers and in front of brokers that could help me get into bigger deals. And then I'd figure out how to fund it. So I've gotten really good at being creative. And if a deal's there, I'm going to figure out how to take it down. And so I've been able to, JV on some nice larger apartment buildings. And now I'm targeting apartment buildings that are much larger than what I can take down with a couple partners and myself. And so my main thing that I had to really start studying was raising private money. And so I really like Matt Faircloth and Joe Fairless. They both have, amazing books on raising capital and syndication. And now, after reading those 2 books, I was brought into a deal and I'm working on my first syndication on the Atlanta deal. And I was just amazed at how much money I was able to raise really in just a couple of weeks. But it's that reading and understanding, but then taking action. And although I never could have done what I'm doing today without going through all the hard times of doing everything myself on my own rental properties and being in an environment at AIG, even when I wanted to leave and I thought I was going to be forced to leave, where I worked with private placements and I worked with SEC filings and I learned about finances and money management and had the wealthiest clients in our bank. So I can see looking back how everything that I learned through my journey, through the good times and bad, has kind of positioned me for where I am today. And being able to confidently take the next step in my investing because I've learned from the skill sets that I did have. And so I would just encourage everybody to look at your skills, look at what you've done, and realize that there's a reason for what you're doing and where you are today. And you just keep adding new layers of growth and of learning, and then have the confidence to take that action. And that's what's going to continue to propel you to the next level and the next level and the next level.
Absolutely. Now, our core message in our show is to leave our families, communities, and the world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So, Anna, if you cannot pass on any money to future generations and we're only allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
Sure. I've thought a lot about this, and my life motto is to love God, love others, use money, and never give up. And, having a strong faith is really what has gotten me through many, many down times in my life. And I've just always had this faith of knowing that if I did the right thing, I was good to people, I did everything that I could with integrity, that God would be faithful to work all things together for my good. And so it's really important to me to take time each day to just pray and to think about what I'm grateful for and how blessed I am, and how far He's brought me so that I can then be a blessing to other people. Along with that, loving other people. We are here for a short time. I mean, life goes fast, and my legacy isn't about leaving money. My legacy is about truly being good to people and to making a difference in their lives in whatever way I can, wherever I'm placed. And so, and to use money. And I think a lot of people in this world really use people and love money. And I think that's what's created so many problems that we have today. So if I can instill in my children and other people to love people and use money to not only benefit yourself and future generations, but other people, things just go better and life is just so much sweeter. And the last thing is to never, ever, ever give up, because problems happen. Your entire life will go wrong, and you will think that they are going to destroy you and that you'll never get back up. But if you always have that mindset of, I'm going to be resilient and I'm going to have grit and I will get back up and I will do better, that positive outlook, and that allows you to continue to have joy through those difficult things. So if you can just figure out how to get creative and get through problems, you will become so much stronger and you'll be able to do things you never imagined you can do.
Very, very powerful. Where can listeners learn more about you? Where can they follow you, connect, and reach out to you? And where can they stay informed of all of the projects that you're involved with?
Sure. So I have two websites. One is reimom.com, and that's very focused on speaking and coaching. Also, zenithcapitalinvestments.com for Zenith Capital Group. That's where they can find more about multifamily opportunities as a passive investor. And for those of you that are learning about either being active or passive, I have a Facebook group called Creating Real Estate Wealth That Lasts with REI Mom.
Fantastic. Anna, well, this has been a blast, connecting and meeting you and interviewing you. And I want to thank you so much for coming on the show. And thank you so much for sharing all of this wonderful knowledge and providing so much value for my listeners.
Thank you. It's been my pleasure.
Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements. Thank you again for joining me on the Cashflow Ninja. If you like what you hear and appreciate what we're trying to build here, please subscribe, rate, and write a review for our show on iTunes, and share our show with family, friends, and your network. If you're not a subscriber to our newsletter, you can sign up for our newsletter at cashflowninja.com. I want to thank you for spending your most precious resource with me today, your time. Until next time, my friend, live a life of passion and purpose on your terms. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.